Davis Oliver here with the Taxes Save team. Another great week and exciting case study to share. This one is about the great wealth transfer we'll be covering this week. For those who are listening, this pertains to everyone. Whether you're a high income earner, whether you're young, whether you're older, whether you've saved a lot in tax deferred assets, if that's the case, this is for sure for you. But this is really going to pertain for everyone because we're about to see over the next decade, folks, $37 trillion passed from the boomer population down to the next demographics. So this is definitely going to hit home. But this is all about inherited tax deferred assets from IRAs, 401ks, SEPs, you name it. It comes with now, Sally, with a 10-year provision rule thanks to the Secure Act 2.0. Oh, right. That's the government rule of saying, hey, we're going to get you going, and we're going to get you on the way out, or at least your legacy. So this pertains to everyone, right? This is a non-spousal beneficiary. Right? So they have an inherited IRA within 10 years. They have to spend down those IRAs, or they're going to be penalized, and it's all taxed on top of their ordinary earned income. So this is a great case for this week. For those that are listening, we always do a case of the week. You can check out more case studies like this at taxessave.com or our YouTube page at taxessave.com. And you can see things where we help clients on a daily basis from Roth conversion, business owners, high income W-2 play a huge tax impact. With that said, this one's all about inherited. We'll go ahead and show, as we always do, what we did for this client with one strategy, how we got rid of entirety of these inherited RMD tax risks for this client this year. So with that said, I'll go ahead and share my screen and we'll hop right into it. So this client, they just inherited from their belated parents $500,000 of IRA, which is great to get an inheritance, right? But that comes with a tax risk because they're already making good income as well. They're making about $420,000 a year married filing jointly in the state of Georgia. What we've seen historically on their IRA accounts that they inherited, they were making about 8% IRA growth rate over the life of those accounts. Well, with that, right, if we don't do anything over the next 10 years on top of their earned income, they'll pay $203,000 of tax just on these forced distributions they're taking from this inherited IRA. We wanted to eliminate that. What do we do? So with that, they chose a great strategy in Section 181. Also pertains to depreciation of an asset, being a film here. Here it's a great film with a great production company called Angel Studios. Angel's done maybe films you've heard of before, like The Sound of Freedom, David, Chosen, some great options out there. So this is an investment. That investment, though, generated a nice tax benefit of 5-to-1. So that $100,000 generated a $500,000 deduction. We use that $500,000 deduction to completely distribute out all $500,000 of that inherited IRA so that they were done having to take those forced required minimum distributions on what they've inherited from their belated parents. So that right now offset completely dollar per dollar. By doing that distribution of a $500,000, we just added on top of their income 900. Now we jumped their income from 420 up to $920,000 of income. But because of the deduction with the film, it's like the distribution of the inherited IRA never happened. Then now we'll have to take any more RMDs. What do we do additionally? Well, we're big on folks not letting the government get another bite of the apple, we like to say. Right? If we're going to go save you over the next 10 years, $203,000 in tax like we did for this client, we don't want to go through that in a brokerage. We don't want to go through it where the government can say, hey, we want to tax you again. So this client, they chose a great investment fund we have in the AI data center space, uses cost segregation, depreciation, to give about 8% tax-free cash flow return because of how that fund's structured. So we got rid of their RMDs, the inherited RMDs they were facing, and we put it into an investment that now builds equity and cash flow 100% tax-free so the government can't get another bite of the apple. Well, that's huge. What does that really do? For these clients, right, being in their 60s, they're getting closer and closer to retirement. But how much of that trajectory can we change? And this is by taking the tax savings we can save today, folks, at today's tax rates, and putting them together as something tax-free. This is what we did here. So look, if we just spread that over 3 years, right, taking $20,000 per year and reinvesting it into this fund as they did, look at this. We now turned over 20 years that $203,000 turned into $930,000 of tax-free growth that they never paid a tax on. That's huge. That changes the trajectory for many of our clients. Now, everyone's circumstances are different. And if any of this you think sounds interesting to you, and for many it should, right? Maybe if you're familiar with your parents' finances, or if they've worked hard and saved harder, if they're higher income earners or their career, likely is they have these tax deferred accounts. Maybe sit down with them or have us reach out to us or look at some of our case studies and see how we can really impactfully play by helping clients before they pass get this money converted to Roth. Roth has no RMDs, has no legacy tax risk to you. We just don't want it in a tax deferred account like a 401k or an IRA. Or if you're a high income earner, and maybe you're younger, right? Maybe you need to start this conversion game sooner. So whenever God does call you home, we can help play that impact as well. So it goes both ways, folks. Whether your parents have a lot of tax deferred accounts or you're that person with a lot of tax deferred accounts, worried about your kids that are high income earners, this works both ways, and we can really help if we can get on our guns and get a strategy and conversion done sooner before we have to just walk into what the government set up for us with these inherited IRA rules. Hopefully this was helpful for everyone listening today. Again, if you would like to learn more, you can check us out at taxessave.com, where we do a case study of the week, as well as our YouTube page. But hopefully we can see you in the future. We do offer a free complimentary tax discovery meeting to see what your tax road looks like and the potential solutions we can provide to help. We look forward to seeing you there. Have a great rest of your week.